Welcome back to another episode. Today we are going to take a closer look at Tesla and look at recent updates that have passed in the past few days and also in the past few months. Unfortunately, we can see Tesla right now, as I am recording, is down roughly 6%. In the past 5 days, the company is down roughly 21%, and year to date, we can see the stock is down over 70%. So let's take a closer look at what's happening and what's driving this downward spiral for Tesla. Let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So first, I want to start off with maybe some positive news, and this is probably one of my favorite news, especially as it deals with the semiconductor market. So for those not familiar, Tesla does create their own chips, right? They have numerous semiconductor solutions. They have their FSD chips that go in their vehicles and also are expected to go in their Tesla bots. Then they have their Dojo chip, which is their semiconductor solution to help power their supercomputer, the Dojo system. Well, there are reports that Tesla plans to buy 4nm chips from TSMC's Arizona fab. So this is pretty interesting for numerous reasons. One, it showcases, hey, the strength of Tesla and their semiconductor solutions and going with big players like TSMC. Second, it also shows the strength of TSMC, as previously Tesla used to make their chips from Samsung. The other kind of cool point here, if these reports are true and the numbers are true with how much they need to purchase, Tesla would be one of TSMC's top customer. So it kind of just shows how Tesla is not just a car company, right? It's more of a tech company. How many other car companies are designing their own chips and kind of going with big players to get them manufactured. So that's pretty interesting. I think that was great news and would definitely love to hear more about it as more news comes out. Now, I do want to take a closer look at some bearish news. Here we can see from Reuters, and the title here, Tesla used car prices bubble pops, weighs on new car demand. So throughout the report, it does mention that Tesla's used car market has plummeted a lot faster than the overall market. And this is kind of creating an option for buyers to, hey, either purchase a new vehicle or now they can actually purchase a used vehicle at an attractive price. And obviously that's going to affect the new car demand. That kind of trickled in with what we're seeing recently with the consumer market, right? We are seeing Tesla sent out credits if you do purchase a Tesla vehicle, a selected Tesla model before the year's end. You get $7,500 in credit. I personally received an email. I think anybody who kind of wanted to purchase a Tesla or had the potential to be a customer might have received that same text or email where it's a nice credit off, and you also get some extra features like some supercharging miles. So pretty interesting to see right now. Obviously, this is going to drag stock prices down as it kind of shows that, hey, maybe the consumer market, even for a product as highly demanded like Tesla, is seeing some pocket of weakness. Continuing with that, we are seeing another pocket of weakness here. Tesla, this is another, I found it here on Yahoo Finance. Tesla to run reduced output in Shanghai in January, plan shows. So there are reports that, hey, Tesla was already running on reduced output at late December of this year. Again, it's kind of feeding that bearish fire that, hey, you're seeing used prices go down, you're seeing Tesla offer more credits, you're seeing Tesla reducing output. Is definitely a perfect storm for a bearish case for Tesla stock, and that's why I believe we're seeing these stock prices down. So not only are they reducing the output in December, they're also reducing the output in January. It is important that is closer to the Chinese New Year, but there are reports that previous years they haven't really done as much of the reduction as they are doing now, and that's what's causing some fears. So now I do have some other updates on the overall market, but before then, let's take a closer look. If you are enjoying this episode, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link at fool.com/Jose. Finally, if you are here, it might mean you're a semiconductor investor to some extent. I mentioned Tesla, in my opinion, is a tech company, especially with that semiconductor solution products that they have. I actually talked about it in my recent podcast, an hour-long podcast on the semiconductor market. The link should be down below, or you might be able to click here. Check out that new channel, weekly podcast on the semiconductor market. So now let's take a closer look at the overall automobile industry. So here we saw some reports came out today that Chinese EV maker NIO cuts delivery guidance for the fourth quarter, citing COVID disruptions. So obviously China is a big player for Tesla, and again, it just showcased the overall market sentiment right now, and maybe Tesla might be seeing the same thing. So again, even the overall market seems to be a bit weak, or a pocket of weakness for companies like Tesla. The other thing here, we saw another report come out today why 2023 could be another difficult year for the automobile industry. 2022 was very difficult due to kind of the overall supply chain disruption that we were seeing. Even though that disruption is easing now, what's happening is right now we are seeing kind of a huge decrease in the used car market prices, but also consumers are fearing a recession, and the consumer purchasing power might be reduced. So obviously that would affect the automobile industry, and at the end of the day might affect companies like Tesla. So we definitely see a lot of bearish cases for a company like Tesla right now. Like I mentioned, as I am recording, stock price is down over 6%. I personally see in the short term of things can continue to get ugly to some extent. Volatility will be here, especially for a company like Tesla. If you are a bull on Tesla, but bullish in more of this is more than just an automaker company, then maybe this might be a great buying opportunity. Obviously, I mentioned those great solutions in the semiconductor space, which definitely have a strong foundation, right? They definitely have some nice chips. They're definitely getting built on a strong platform. So in my opinion, if you consider Tesla more than automaker company, then there's definitely a good bullish thesis behind purchasing at these levels. Obviously, valuation at the end of the day is still high, depending on how you look at it. So that might kind of push off certain investors of it. Definitely Tesla, a growth company with huge potential, but with huge potential comes huge risk. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.